Did you know that owning just 5 Tesla stocks is worth way more than you think? This may come across as highly doubtful to others, but Tesla bulls can certainly attest to this. Make sure to stay tuned and keep watching to find out how it is possible. It is no secret that Tesla CEO Elon Musk is a walking controversy. Some say that it is just a marketing ploy to make his name and that of Tesla known. If that is true, that is indeed brilliant, as it is a free marketing strategy. Well, it may be true to some extent, as a lot of people are interested in owning Tesla shares. Today, you will find out why owning 5 Tesla stocks is worth way more than you think. With a reported Q1 2022 net income of $3.3 billion, a quarterly record exceeding Wall Street estimates as revenue surged 81% year-over-year to $18.8 billion, and a Q2 financial report that shows a revenue of $16.934 billion, which is about $400 million more than Wall Street expected, Tesla proves to be a success despite several hiccups the company has encountered in the last 2 years. This, among other news that made it to various news headlines, might just be the reason why people want a piece of Tesla. As investors and analysts alike have varying claims on Tesla's value, some claim that the EV company's stock is overvalued while others argue that it is in fact undervalued. There are high and low valuations for Tesla stock. However, despite big names predicting a lower price for Tesla stock, the financial numbers presented a while ago prove otherwise. For example, an investment of $6,940 worth of 10 shares at their peak price in June 2021 is approximately $7,500, which equates to around $540 earnings in June 2022. This is a notable stock performance amidst several predictions that Tesla stock will continue to bottom. This may be largely attributed to Musk's unique style of leadership and how the EV company is ahead of everybody else in research and development as well as innovation. Investors in 2010, when the initial public offering's price per share was just $17, would have their investment paid off by now. Nearly a decade later, a $1,000 investment in Tesla made in 2010 would be worth more than $36,000 as of February 4, 2020, according to CNBC calculations. By comparison, a $1,000 investment in the S&P 500 would have earned a total return of just over 281% over the same period. According to calculations, a $1,000 investment made in March 2012 would be worth $148,755.87, or a gain of 14,775.59% as of March 25, 2022, and this return excludes dividends but includes price increases. The S&P 500 rose 223.54%, and the price of gold increased 13.37% over the same time frame in comparison. Looking ahead, analysts are expecting more upside for Tesla. A lot of innovative projects that Tesla is currently working on are much anticipated, and it seems that said projects will definitely boost the company's income and revenue, which will positively affect the stocks. Tesla's FSD Cybertruck AI robot named Optimus and Starlink project are just some of the projects Tesla is working hard on today before presenting them to the general public. Once Tesla has been successful in introducing AI projects, AI will definitely be a huge part of the world, with Tesla on the leading front, just like they did with EVs. If this indeed happens in the near future, the company's stock price is sure to witness a significant increase. Before, Tesla stock was worth less than $100 until it doubled, tripled, and multiplied by tenfold when the market exploded. If the same is to happen again with the introduction of AI, Tesla stock investors holding 10 or more shares may well possibly see their investments double in just a couple of years. In 2021, Tesla delivered more than 900,000 vehicles and plan to increase that by 50% in the current year. Numerous analysts' enthusiasm for Tesla stock is focused on the company's operational expertise during the pandemic. It is a well-known fact that the world was almost at a standstill when COVID-19 spread across the globe. At the time, most car manufacturers faced numerous issues like chip shortages from the supply chain. Despite this, Tesla pivoted between suppliers by rewriting its software to keep its factories working. It even opened new manufacturing facilities in Austin and Berlin, which is not an easy feat given the economy's downward spiral during the pandemic. These new facilities, added with that in Shanghai and California, will increase operational margins as well as scale to manufacture more vehicles. Moreover, However, the newly built Berlin and Austin plants allow an opportunity to achieve higher gross margins. The Future Fund analyst Gary Black said that the electric vehicle industry will reach a market penetration of 60% by 2030 and anticipated that Tesla will achieve 21% of the auto market share. Black believes that Tesla will quadruple its current value to reach as high as $4 trillion by 2030. According to this estimate, with global light vehicle sales at 85 million units, Tesla would be delivering about 10 million vehicles a year by the end of the decade. He even predicts that Tesla's current fleet's existing sales will make the company $140 billion, increasing Tesla shares by $100. As a clean energy company, Tesla's mission is to accelerate the world's transition to sustainable energy through increasingly affordable electric vehicles and energy products, which is why the Tesla Giga Nevada's construction was put into motion. Tesla Giga Nevada, which is also referred to as Tesla Gigafactory, is a lithium-ion battery and electric vehicle component factory in Story County, Nevada, expected to be the largest building in the world and powered by renewable energy to achieve net zero energy. This structure is meant to solve Tesla's battery crisis. This Gigafactory is said to have a planned footprint of more than 1.9 million square feet, which aims to ramp up production to 500,000 more cars annually. Will you be interested in buying Tesla shares today? Share your thoughts in the comment section below. People interested in buying shares but are not that well versed in the financial industry may wonder about the smallest possible amount of shares they can own. While a lot of people might say that the smallest number of shares an investor can purchase is 1, the real answer is not quite as straightforward. Today, it is increasingly common for investors to purchase fractional shares, where as little as $1 can be applied to a stock buy order. While there is no minimum order on the purchase of a publicly traded company's stock, many brokers in the past advised buying stocks of stock with a minimum value of $500 to $1,000. This quantity size is due to the fact that no matter what online or offline service an investor uses to purchase stock, there are brokerage fees and commissions on the trade. In most cases, one share would cost the same amount as $500 of the shares. But again, with many online brokers moving to commission-free trading, these considerations may no longer be as applicable. That said, investors may consider buying fractional shares through a dividend reinvestment plan or DRIP, which doesn't have commissions. Why should you invest your hard-earned money in Tesla stock? Although numerous uncertainties surround Tesla these days, a lot of the worrying around Tesla stock is hearsay until proven differently. Despite headline-worthy innuendos, Tesla's Shanghai Gigafactory is back at production levels of 1,000 EVs, last seen before April's shutdown. Moreover, executives believe building 2,600 vehicles a day is achievable, which sets Tesla up to produce its targeted 1.5 million EVs. With Tesla's forecasted vehicle delivery growth of 50% along with huge profit margins, shares trade for less than 50 times this year's earnings, and that makes Tesla stock a solid choice for investors to buy growth at a compelling valuation. Right now, investors also won't get an argument from an underloved Tesla price chart that looks like it's on sale. It may or may not be a well-known fact that Tesla neither buys ads nor has a PR department. As earlier mentioned, controversial Tesla CEO Elon Musk does all the work with free marketing. Sandy Monroe, an automotive engineer who specializes in machine tools and manufacturing, said this about Tesla choosing not to buy ads or create a PR department. "What a great idea. Somebody else should think of that too. I mean, Tesla gets in the news every day. Why? Because they have a leader. Can you tell me who the president of Volkswagen is? Do you know who the president of Ford is? Do you know who GM is run by? Do you know who runs Toyota, Honda, Kia, or Hyundai? No, you don't know any of them. But you know who's running Tesla. Why would I need to have advertising if I had somebody like that at the helm? Why would I need advertising? Why would I need PR?" This is probably why most people say that Musk intentionally makes controversial statements just so he will be talked about. If that is proven true, that is a brilliant and priceless marketing tactic. Visit Tesla stock and watch our other videos for more of this content.